It's really great to be here to share with you what is really quite an exciting near-term copper development story. And for those of you in the auditorium and those of you at home, I intend to focus primarily on that near-term opportunity, which is the Nifty Restart project. If we just do a quick, you can read these at your leisure. A quick Cyprium investment overview. What is Cyprium, who are we, and what do we do? We've been in existence for 3 years, and we started off with the acquisition of the Q copper project. We then moved to Nifty Well as an acquisition, and just over a year ago we finalised the acquisition of the Nifty copper project, which included the Maroochydore resource and the near IGO JV exploration tenure which surrounds the Nifty tenements. We're ASX listed, we're a Western Australian focused copper developer and explorer, and really our portfolio of development opportunities is over 1 million tonnes of contained copper in JORC compliant mineral resources. If you look there, you'll see that obviously Nifty and Maroochydore are very close to each other, and again that JV with IGO that surrounds Nifty tenure is over $30 million worth of expenditure over 3 years to earn 70%. So we have somebody highly focused and liquid doing exploration in our adjacent to our tenements. We're a great team of people with a lot of SXEW copper experience. Chrissy touched on it. Our experience is in very diverse locations. Our last one was on an island in the Banda Sea in Indonesia. So Nifty, although it's remote, is something that we're really quite happy to be working with. And if you look there, we had at the end of the last quarter $14.1 million worth of cash, and we've paid deposits on all the long lead time items for the Nifty restart, so that doesn't come out of that. The 14 million there, you'll see we're essentially a $100 million market cap company with huge near-term development potential. Nifty went into care and maintenance November 2019 as a producing asset. So everything we're doing at Nifty is restart, readjusting, resetting, amending existing permits. And I just wanted to make that definition quite clear. The Nifty restart is all about going back into production. The project we're going to be talking about is about 6.3 years, and I'll explain the about as we get a little bit further on in the presentation. But it's really only 10% of the identified mineral resources that Cyprium actually has. And it's just one of those asset purchases that I think has happened at the right time in the right thematic. But hopefully after this presentation, you'll actually have a clearer understanding of what the direction is for Cyprium in the short term. The restart study plates 146 odd thousand tonnes of copper plate as cathodes, LME A grade 5/9 copper, and it comes from two sources, which is a remnant open pit mining proposition of the heap leachable material from a previous incarnation at Nifty, and the retreatment of the existing heap leach pads. And I'll go into each of those in a little bit more detail as we progress. The key headline numbers: it has a free cash flow of over $500 million, $544 million, and we've used revenues at a conservative US $9,000 a tonne copper price and a 75% exchange rate. And I'll just give you a little bit of an idea as we progress towards the end of the presentation on some of the sensitivities there and how that might affect the outcome for the project. C1 and C3 costs there are stunning. And if you know what the current copper price is, mid $4 ranges, then there is a huge margin there. Pre-production capital is just under $150 million. Maximum drawdown to first sales is just under $200 million at $193 million. And that, when you just, you can use whatever rate you like, but if we use 7% NPV, that's $277 million. And as I said before, that's only 10% of the company's mineral resource inventory. Total mined and stacked, and I'll explain the stacked as we get a little bit further in, is just under 26 million tonnes at 0.65% copper. Won't spend much time here, but if you look to the brown, it's the underlying asset as it stands at Nifty. The blue open cut is the restart open cut design. Keep that picture in your mind, because as we go to the next one, you'll see that we've coloured it, instead of blue, we've coloured it in the 8 stages of the restart study. And sitting underneath that is a conceptual life of mine open cut. Nifty, for those who are more familiar with the project, started its life as an open cut mine, 93 to 2006, and from 2004 till its care and maintenance in November 2019 was an underground mine. We have produced that life of mine shape because that shape sits around nearly 34 million tonnes of sulphide resource at 1.8% copper. We are not going back underground at Nifty. This is quite shallow as a deposit in global terms, and it will be mined by open cut in the future. In fact, the underground has been permanently sealed and is in fact now our underground water storage as the project progresses through the ASX stage. We've started some sulphide metallurgical test work to advance that project. And for those of you who might know some of the members of the team, we actually developed a sulphide heap leach operation in Indonesia. So sulphide heap leaching is something that is in our skill set. So if we take the 6.3 years of the restart study and we look at that life of mine shell, we're looking at an operation that's potentially 20 plus 6.3 years, so it's 2 decades. This is an operation that's been operating for 28 years previous to this. Let's talk at some of the physicals. Whoop. I'm obviously not getting the right pressure here. Yeah, here we go. The Oxide Open Pit physicals. What happened with the existing open cut is that it finished in 2006, and at the time Aditya Birla were developing an underground operation. That design was never completely mined. And if you look at today's copper prices and the economics around the copper business, the cut-off grades now are much lower than previously. So this is around mining an unfinished open cut, but also the additional material that comes in with a change in cut-off grade. Total waste mined is nearly 53 million tonnes. Total overall strip ratio of 6:1. Reagent consumption test work is underway at the moment. We ran a number of columns, and you can see that in some of our past releases, where you'll see our confirmatory columns from past work have run in the lab, and we're looking now to actually try and get that BI, that optimisation of reagents. It does not include 1.2 million tonnes at about 0.8% copper inside of that shape because of the drilling density. It's inferred resource, it hasn't been designed. For those of you who follow the company, we've drilled about 20,000 metres of RC in and around the existing open cut, and that's to further define that resource and to infill and turn that into material that we can include in the design. And that is a huge uplift. 9,600 metal tonnes at current value that was going that way to the waste dump, which goes that way to the ore ROM pad if it is of sufficient grade. We're currently working up that mineral resource estimate, and I'm sure everybody has heard numerous times so far, assay results have slowed down what was an ambitious timeline, but we expect to have that update this half year to that Nifty open pit resource. What I'm going to talk about now is the other material that's going to be stacked, and we're calling that the retreat project. Currently there's just over 17 million tonnes of partially leached heap leach material at Nifty at just over half a percent copper in grade. You can see there a photo of what an agglomerate looks like. That's the actual heaps that we collected. We dug a trench and collected nearly 10 tonnes of material, which we've been running trials on in terms of column leaching, agglomeration, and all other test work we're doing. And you can see there that what agglomeration does is just sticks fine particles to coarser particles so that there is fluid able to be percolated through the heaps to dissolve the copper mineralisation. That fluid is sulfuric acid, so it can't be like a gold operation where you agglomerate with cement. This is in fact an organic polymer. Cure and leach is important to that recovery, and there's also been a myth that has existed around copper that can't be recovered out of the Nifty heaps. Our recent heap leach work and looking at different sizings has showed that the only material that doesn't get leached is the very fine material that's occluded within even the finer particles. What are the key project metrics look like? Pre-production capital I talked about before, nearly 150 million, maximum drawdown nearly 200 million. We've had a data room in place now. The study was finished in March. We've had a data room in place since early in the year. Last week we had the independent technical engineers on site for the financiers to look at the credibility of the restart study for the financiers, and we're well advanced in the finance process. Operating cash flow there we talked about. NPV, the IRR I didn't highlight, but at 37% is really quite stunning. But really that's because of the 3-year payback. It's a 3-year payback in a 6.3-year project. And the prices there we've talked about. The things we don't show in the metrics, and we've published essentially the executive summary of the restart study to the ASX, is 164 full-time jobs after construction, royalties of $53 million to all sorts of governments, tax of $188 million paid on that project. Some sensitivities here, you can look at those, and there's more in that release on the study. If you take the copper price up to current levels, it adds about $100 million to the NPV. If you drop the exchange rate to where it is now, it's about another $50 million to NPV. What does that tell us? It tells us that it is copper price and exchange rate driven. Because if you look at the next two, operating costs and capital costs, 10% increase in each of them only drops NPV by 61 and 25 million respectively. Government approvals, I highlighted earlier, this is a restart project. Permits are already in place. They're only being amended. We've had one back already out of those that are listed there, and most of those we expect to be coming through in this half. I talked about the drilling, 20,000 metres of drilling. You can see these cross sections in our previous releases. Those results, which are quite stunning, will be included in the resource update that's going on at the moment. I'll finish off with the timeline. We are a near-term copper producer. We will be producing copper in the second half of calendar year 2023. We will be commissioning late in the first half of calendar year 2023, and you'll see there the boxes we've already ticked, the green ticks. Finance drawdown we're expecting will occur after the middle of this year, and we're optimising as we speak. You've got a new mineral resource estimate coming up for some extra news, and as I say, the first copper will be on the ground in 2023. Thank you very much.
Thanks, Terry, and thanks, Cyprium.